I know we've got our thoughts on kind of the trends and everything, but I don't know who's seen more technology stuff than you have in banking, so love to get your thoughts on kind of why you're doing what you're doing and what you see in the market, what you're seeing from the banks. It's kind of a wild time, man. So love to hear what you see.
Yeah, I mean, it's like everybody knows it is a different time right now. I was looking through some stuff yesterday, and I've participated in probably 3,000 plus merger and acquisitions in the last 20 years.
Yep,
it was you.
Just what's that?
Did all that?
It was you.
No. I just helped them with their data acquisition, access, and API needs. Right, so it hit me when I started System Legacy Solutions in 1998. There was 10,800 banks in the country. Mm-hmm. So you fast forward to 2012, when I started Integrated Legacy Solutions, ILS, mm-hmm. Then there was 7,200 banks in the country. So, in 14 years, we went down 3,600 banks.
Yep.
So it's about 250 banks a year, just on average. And if I look back at what we always, reported, and that's about right. So between 2012 and 2021, though, we went down the same average number, about 250 banks a year. So now there's roughly 5,000 in the country. Now things are getting serious, right? So we've cut our opportunity.
Up that. It's a big deal. And I don't think people have really got their arms. We keep trying to, it's like you're ringing the bell and sounding the horn and trying to summon the army, and everybody's like, relax, man. It's normal. It's not normal anymore.
That's right.
Well, what's not normal is the fact that, and let me get my stat number. In 2006, there was 267 de novo banks that were approved, charters that were approved. Fast forward in the next 10 years, or the last 10 years, I should say, from 2020 back 10 years, there's only been 71 new banks.
Yep. This is a great point here. Let's talk about this just a second, because I've kind of another one of those pound the table moments for me. We had a system that for some reason everybody thought was a bad idea or a bad system. Let's bring on 125 banks a year and let's close 120. And it's like a bank failure is not the end of the world. A new charter that doesn't make it isn't the end of the world. But when you have bank mergers and banks are going away, whether it's failures, mergers, whatever, a reduction in number of charters, and you don't replenish this, you're funneling money to the top, and you're letting the big.
That really was exacerbated in kind of the Great Recession from 2008 to like 2013. We lost 500 banks, and these are rough numbers, right? You guys, you're the data kings. That's what you do for a living. Like, I'm not telling you anything.
Actually, 700, but that's okay.
Yeah. There you go.
Yeah. Okay. So we lost a ton of banks during that time frame with no new de novos.
Before you answer this question, I want you to really hit on this, because you know as much as anybody I know about this. I'm going to dispel a myth here, because we always want to be straight shooters on everything. If you think there is an open API in banking, it doesn't exist. So take it away. What do you think? I guarantee y'all that are listening to this guy knows everything there is about it. And we don't have to name names and call people out.
You built more of it than most everybody else combined. So tell us what's up.
I mean, yeah, there are APIs to every core out there, right? Yeah. They got all the different core vehicles, the exchange, the Fusion Fabric, all those kind that we're all familiar with, and it has made it a lot easier than it used to do mass API integrations, right? If you think about my little company wanting to hook up to a Jack Henry, a Fidelity, or Fiserv, or Finestra, right? So now I maybe have to do it. I only have to write part of it once, right? And then, right, I still got to do a lot of work every time I do each one of those. But now I've at least got a segment of it running over their exchange network and their what do they call the store where you go buy the DNA? Yeah, over their marketplace type stuff, and it markets really well. Like it's sexy, it sells, it sounds good, but from an implementation standpoint, back to your point, there are no open APIs, and we don't want there to be 100% open API. I don't think, because then we're talking about freeware.
Right.
Right. And what that's the last thing you want to do is
Hackers
install a bunch of freeware stuff into your banking system.
I think it's actually back to what we were talking about. When you had a broader landscape, there was a lot more endpoints you needed to hit. As that's consolidated up, it's a little weird, right? You've got some areas with pretty tremendous market share, and then you have a lot of others that are just kind of bleeding off. So I think we talked to a lot of people, man, where the question is, which should I build first? Let's say I need a core integration, right? Well, where's the market share live? How big are those institutions? And is that market share growing or shrinking, right? So I mean, you take something like Fiserv Premier, you got a quarter of the bank sitting there, right? Doesn't mean it's an easy or a cost-efficient integration, but there's a lot of banks of size sitting there, right? But what a lot of people do is go out there, market to all the banks, shotgun blast, and then they get a live one that's going, hey, we want to do it. And they then ask, well, what's your core? We'll build an integration. It's insanity, right? And I think as there's more technology out there and more endpoints, you got to think through that and figure out basically your API roadmap, right? Where are you going to go build to that's most efficient for what you're trying to accomplish?
That we really pound the table on with bankers trying to pick technology is, looking at market share, trajectory, and the KPIs, the performance indicators of what their client base looks like, right? So it's kind of a case where, hey, I told you I'd drop your non-interest income. That was my selling point. Well, let's just go look at a bunch of their institutions that they've done this with. Did it reduce their non-interest income, right?
One I tell everybody, Kris, there's an easy one. If we wanted to do new account opening, let's take a new account opening vendor. Let's look at all of his banks and let's look at their growth in deposits year over year. Right? That's a heck of an indicator. And compare that against 3 or 4. And so we're starting to take some of those financial KPIs and blend the financials with the vendor side and see, who's doing what. It's an interesting way to look at it. And we're starting to hear that from bankers. They want to compare themselves to other banks from a technology fintech perspective. FinTech peer analytics. That's what we call it.
Yeah, we've come out with a thing called Bankers Helping Bankers that'll be released here pretty quick. It helps bankers make these decisions better. But at the end of the day, where I think the rubber really hits the road are people like you that have multi companies that you've done.
How many have you had, Kris?
4.
See, that's nuts.
He's addicted, man.
I'm
it's a little problem. I just got a little problem.
Oh, it gives me heartburn, man.
Well,
all right. So why again? That's what I want to know. Right? You've been ultra successful. Okay. Also, one of the most respected guys out there, and also like kind of everybody's favorite. There's nobody that thinks you're an asshole, and everybody loves you. So why are you doing it again? Right? I know you.
So, this is I do. What's that?
This is a great question. I want to hear the answer to this.
I mean, I do enjoy it. I've been blessed with lots of experience, lots of good friends in this industry. And we sat back after I left the as CRO of Nextsoft in August of last year and said, do you want to do it again? We looked at the market idea. It's a diminishing market, right? I mean, why would you try to start something where you're losing, half your customers? Another 9 years, there'll be 2,500 banks if we continue. Right. So why would I want to try to sell that again? And then we looked for products and for a need. I mean, I'm like you guys. I'm not going to just sit around and play golf because I suck at that. So I had to have something to do to keep from going crazy and driving my wife crazy. And so we looked at, where's their need? So none of these guys had a collection system. There's a couple of big guys out there that have collection systems. We looked at the market in general, PPP, the payback, all of the stuff that's now becoming due, the deferred payments on your cars and your mortgages. And, the 5,000 banks that are left, more than half of them don't have a solution, a system for this problem. And they all agreed it is a impending problem. Like, we're going to have a collections issue in our future as a country, as a company, and as a bank or credit union. Right. So obviously we acquired a company called Fusion CRS that had a very robust product in the collections, did a lot of shadow accounting. I mean, they'd spent the last 12 years building this rock hard collections and recovery system. We've got a credit union we're working with now who's asked us to maybe include or link to some financial literacy products for their members that are behind on their payments that are in collections and recovery. So their concern is helping their members through, this is their words, through this tough time financially and getting them back on track. And so I thought that's a great idea. So we went out and looked for some partners in FinTech that maybe we can link to help provide some financial literacy, just some rudimentary stuff, if nothing else. And as we build the AI and the analytics into our system, I think we're going to find some of these guys are only behind because they just don't know. Maybe it's not it's not that they lack funding to pay the bill. Maybe we didn't get it to them. Maybe it's not convenient. Maybe we need to get them something to click on. And I think what's neat about the data you guys collect, which is probably as in-depth as anything that's ever been put out there, right, is if I said which core payment system do I want to change to tomorrow? Well, that's my banker question, right? The response to that is, give me these 5 top priorities that you as a bank have or requirements, and I'll mine the data and give you the top 5 vendors that meet those technical requirements. Not who does your consultant know best, not who's less expensive. Yep. I can give you a less expensive one too, by the way. If you just want cheap, we can give you cheap. Yep. But what you really want is something that's less expensive, but is a better product. There's a difference between cheap and inexpensive, right? And that's the good thing about having the data. And to your point, I spent 20 years building mass data lakes and data warehouses for banks all over the country. Right? They combine. We do it again and again and again. They get larger and larger and larger. What we don't do is mine that data well. We've got access to it all, but I think they need to come up with better ways to look back. And that's what we're doing with the Fusion CRS. Is we're doing some predictive analysis based on the way you've paid, and a bunch of other factors that we can take in from outside non-banking sources, right, to create a risk scoring model for you, where you are, where you live in that town, for your job and your payment history, kind of the all encompassing.
Yeah, that's awesome, man. We have a lot of the same conversations, right? And I think you're getting clever with all that stuff. Where can guys check you out? Is it FIntegration.com? What do you got?
We've got others that's in the small community banks that we've talked a lot to that says, I don't really have a lot of collections or bad loan activity, but what I do have to do is the same Fed reporting. I have to keep the same data, the same analytics that your system takes, but I've got 3 or 4 people doing it for the board or for the Fed reports every month. And if I could just buy the back end, keep our notes there, interface with the core, and then produce the Fed reports really quickly. So our product is going out to those banks that don't really have a lot of collections, as well as the banks and credit unions that do have collections, do have a lot of those kind of accounts. So we can play in either one of those markets, but credit unions seem to all have, a lot of retail accounts and like that.
Well, it's so important right now because everybody's got a lot of deposits. Everybody wants to make loans, and we all know where this goes. We're all going to make a lot of loans, and along the way, there'll be some bad ones. So,
pretty sharp guy.
As we roll into the next phase of this repetitive cycle that we do, this is a great time to look at things like this. I didn't know that you guys were doing some cool back end things on the regulatory front that would actually help a bank and prepare them for what's inevitable in the future.
We've talked a lot about it. It's getting messy, right? And we started all, as you mentioned, through PPP and everything. I mean, all your forecasting went to shit, right? Everything's broken, everything's messed up. And I mean, we're really looking at a long time that works itself through.
Because their reporting was so bad, the Fed says, you know what, just double your loan loss reserves and you're covered. Well, what does that do? That takes it right off of their bottom line. So part of what we're building into, and it's not completely there yet, but in the Fusion part of this is this, if you will, kind of the CECL reporting and the analytics to that to help them actually reduce their loan loss reserve based on their collection efforts.
There we go.
That's good money.
You're not
Kris,
thirsty anymore.
You get the final thoughts, man. What do you got?
Let's end this on a positive note, right? There's a lot of great products that are out there right now. API access has made, accessing data on the front end, the back end, and the middle a lot easier for every company that wants to get into this market. Every FinTech that wants to play in this field has made it a lot easier than it used to be. There's a lot of opportunities there for our business and our other partner companies and things like that. And I mean, I'm so excited about the new cores as well as the old cores, right? And the access and the old cores and the stuff the new cool kids bring to the table. And I'm just honored to be there talking to you guys and even getting to have, meetings with these other guys that are doing some really cool stuff. I mean, believe it or not, data conversions and collections recovery is not near as sexy as I make it sound. But we have a lot of fun doing it.
Yeah. I love it, man. Well, we enjoy talking with you, man, always. And just one of our best buddies, man. We have a lot of love and respect for you. And thanks for riding with the FinTech Cowboys, man. We enjoyed it.
Love it, brothers. Thank you, guys. See ya.
All right, man. We'll see you later.